We are coming at you live. We got
Cooking and
Al
booking.
Bunt cooking and booking, and you know what? Let's pick this thing up. Let's get running. Let's hit the ground running here. First segment. We're gonna. You know what? Actually, I wanted to start it a little bit differently tonight. Today, so Al won't talk about himself. He's
Why
not
you
that
do
kind
this?
of guy. But I'm gonna talk about Al. Okay. Al has a loan in, 1% down, taking advantage of the no mortgage insurance.
Uh-huh.
Actually, he doctored it up perfectly. It's actually a 5% down. They're bringing two. The lenders give. They're bringing three. The lenders bringing 2%.
Mm-hmm.
But the biggest piece of this is they don't have mortgage insurance. So this case scenario, 5% down, no mortgage insurance, conventional loan. So I'm gonna give you some dates, okay? Um, went under contract on October 10th. Uh, Submitted to underwriting the 16th, approved the 17th, appraisals ordered the 20th, appraisal back the 25th. We're CTC on 11/1, 9 days before closing. So
Yeah.
you,
Yeah.
it's
Yeah. Makes everybody's life easier. Look, some people call me the mortgage doctor. That's not why I do it, right? I don't do it for fame or fortune. It's just a byproduct of it. I don't do it for the 5-star reviews that I constantly get or for the smiles that I constantly put on faces every single day, right? Or for the little kids that are walking around waving American flags as I walk by.
so
Um,
why do you do it?
Money. I do it for money. That's why I do it. You
Yeah.
know, gotta be honest in this business, in this racket. No,
Mm-hmm.
it was a great deal. You gotta love when they come together like that. You get one that's you hope you don't have a lot of hitches or road bumps or hurdles, and those are the ones that you gotta. We have enough stress in our lives. We have enough anxiety in our lives. If you can get to clear to close well before the closing day, and not have it come down to the 11th hour, I think that's what everybody would want, right? So that's why we try to. That's why we try to do it. Good setup.
Yeah. So it's one of these specialty programs that we've been talking about.
Yep.
It's clear to close in like 15 days. Um, Pretty solid. Awesome. Good work. All right. So enough of that. Enough pumping you up. You don't need any more
Nah, let's keep
motivation.
talking
So,
about me. There's a couple more things I wanted to say.
all right. So to get into first segment, what's your rate? I think it's. Let's just get into it. Okay. So
Let's get into it.
I wrote a little bit that I'm just going to read. So we had a lot going on this week as far as
Mm-hmm.
rates go and economic reports. Some of the big market movers. October job openings came in lower than expected, and that's following a 2-year job openings low in September. So September was low, the lowest in 2 years. October continued that trend.
Mm-hmm.
Unemployment also rose, so new jobs opening lower, unemployment going up. A little negativity in the economy translates to a little positivity in mortgage rates. We don't root for negativity, but it's
Uh-uh.
just the way it goes.
Eh,
So
I'll take it.
that coupled with the Federal Reserve met on Wednesday, I think it was, and they
Yeah.
discussed raising the rates. They Federal Reserve Chair Powell announced there would be no rate change in November, and it looks like they're possibly considering the recent economic strength as an anomaly, and they're backing off a little bit of that higher for longer stance. We'll see how it goes. Who knows? But that's where we are this week. And Al, what does all that mean for the bond market? What does all that mean for interest rates? Where are we at the end of the week?
Yeah, so things are looking a little bit better, right? We have a little bit of reason to celebrate. We're not going to be eating cheese just yet, okay? But we're excited, right? So we saw the bond touch 5% last week, which is terrifying, right? And that means that
Mm-hmm.
rates are high. And that's all we really heard about. But um, we've seen some sharp declines. And then today, the news of the jobs report coming out, and less jobs created than expected. Um, we saw the T-bill drop to 4.5. Right, I think we're hovering right now at 4.53, 4.54. So what does that mean for rates? They're coming down a little bit. Let's hope it keeps going. We're going to stay positive. We're going to stay excited. Maybe this is the beginning of something. But then again, maybe it's not. Maybe it's just a tease and it's going to shoot straight up. straight up to 9%. We have no idea. We have no idea where it's going, but fingers crossed for something good. Um, yeah,
I
that's what
think
we
that's
got.
I think that's I think that's well said, and I think to your point, we hope that this is a trend of things to come. We hope this is a sign of things to come. But if you're in process or you're getting the process going, to your point, it's a good time to lock because we
Yeah,
don't know if it's going to shoot back up. It was down to it was in the bond was in the threes in April, just a few months ago, 4 or 5 months ago or whatever, and we were all like, it's coming back, and then we saw it go up even further. So we'll see what happens in the future. Great point. It is low. That is positive. Let's be happy, but maybe take that as a sign to lock and get what you can get now.
now, and that's another thing I will say real quick, because that's the difference. One of the differences between you and I as loan officers, right? Is, I mean, we have a good dynamic, right? Especially, for things like this, whereas like I'm the guy who I'd rather lock right away, right? In most cases, when I start the process, I want to lock right away. If you see something happen in the market, you'll hang on. You have more optimism than I do, which I think most folks can tell right away. Where you'll float for a little bit longer and try to lock at the perfect time, right? So you get my
Within reason.
perspective, yeah, within reason. But my perspective of the guy that just wants to lock right away and like we get what we get. If it falls, so be it. If the rate goes up, then you know we made out like a bandit, right? And you know you also get better pricing when you lock in within 15 days. So there's different ways to look at it. We have a good dynamic. I'm like the smart, funny, handsome, cool guy, and you're like the tech guy, right? So we have this real good dynamic that works out pretty well.
Yeah. Uh huh. Dude, I wish that I was a little sharper today.
Uh, yeah, but it's the truth though. You gotta admit that's the truth. Not the smart, funny, cool. I think everybody already knows that. But as far as like locking rates, locking
Yeah.
rates, and you know what I mean. It's two loan officers that do the same job that might kind of look at things or do things a little bit differently. Both of us have had success, so just different perspectives on how to do it.
Yeah, and it depends on what the market's doing. It depends on the person's pain tolerance or threshold for risk. So yeah, and you got to have those discussions. And 9 times out of 10, if it is a volatile market like now, it's like you have that conversation with the client and you say, look, we can lock in at this rate today. Um, we do give more competitive pricing 15-day. If you're 45 days out, it's going to be a little more costly, blah, blah, blah.
Yeah,
Is anything going to happen over the next 15 days? Anything on the calendar that could move rates negatively or positively? You got to
yeah.
think about and talk about all of it. And there certainly is not any issue with locking early and often. I'm for that, but sometimes I'll present the alternative to folks, and they're down with that too. So
Yeah.
yeah, you're not wrong.
In
So
this particular scenario, if it was last week and I just started a file, I would have locked in right away, right? And if you just started a file, you would have held off most likely, and you'd be the hero, and I'd be, the schmuck, the fool, the idiot.
yeah, well, at least you're handsome. It's
I
kind of how it goes with the show.
appreciate
It's
that.
like you could, oh, Al's the handsome, funny, cool one, and Adam's the tech guy. What he really means is like, you know, I'm just like, hey Al, makeup's at 3 o'clock. Be there on time. All right, everything else will just fall into place.
Pretty
So
much.
that's
Pretty
yeah,
much. It's like herding cats. I have no doubts being in your position, but you get me to where I'm supposed to be, and I get the job done for the most
yeah.
part.
And let me. You know what? I'll lean into it. I got the headphones on and the microphone and like this wrinkled T-shirt. Maybe I do look like more of the tech guy. And look at you. You're looking
Uh-huh.
straight out of freaking. Did you walk out of the Gap today? Do you have? Was there a sale at Nordstrom Rack? Are we doing? What are we doing next? Is it local news?
Yeah. Sorry, I had a couple fans walking by. Nah, I'll get no.
Breaking
I'll
news
call.
anytime
I'll
it
tell you.
breaking news anytime it feels like breaking with Al Butt.
Guys, they're always doing this. Yeah, no. It's Ace. My friends call me Ace. I got a hole in one once. Everybody calls me Ace. I don't like to talk about it though.
All right, Tom Tasselmeyer. We have this uncanny knack of making great time with our segments and then filling the in between with complete nonsense and going overboard.
Yeah,
Um,
well, that's 25 years of friendship for you. So
you want to keep rolling? Should we keep
yeah,
rolling?
yeah. Let's keep
All
rolling.
right.
Let's keep rolling.
So next we're adding a segment, FAQs, frequently
Facts
asked
and
questions.
queries. Okay.
Facts
Huh?
and nice, not bad, not bad. So maybe it sounds elementary to some, this question, or maybe it's helpful information. But a question that I get that people ask, um, believe it or not, often is, what is an appraisal? So
Hmm.
Al, what's an
Yeah,
appraisal? Nuts and
yeah.
bolts.
Nuts and bolts. So, and yeah, I mean, this is just basically to give a little bit of information for the folks who are starting the process or have been through the process and maybe don't understand all the nuances, right? So, basically, appraisal, it's a third party evaluation of the home's value. Okay, where an appraiser is going to come through. They're going to walk through the house. They're going to take their pictures. They're going to place an opinion of value on the home based on the condition of the home, and also comparable sales, right? Sales in the area that of homes that are comparable to the one that you're buying, right? Those are going to be the two biggest indicators of what that value is going to come out to be.
Cool. And why do we need an appraisal? Why in this process? Why is it a part of the process?
So mainly it is to protect the lender and the buyer, right? Um, from lending over, lending over the value of the home, basically, or buying a home above the value. Now you're still going to have that, right? You can still have somebody pay more for the home if the home gets bid up, but for the most part, that's really the reason.
Okay. Well, I think I might touch on that in further questions here because I have a few more for you. Uh, all right. So, all right, Al.
Yeah.
When you're buying a house, you're going to need an appraisal, and everybody talks about inspections and stuff. Is the
Hmm.
appraisal the same as an inspection,
No.
home inspection?
What? No. No. Completely different. Completely different. Um, for the appraisal, the main purpose is the value, right? That's the main purpose is the value, where the inspection is more about the condition of the home and updates and make sure everything's in proper working order to give you an idea of the bones of the house, right? But the appraisal is for the value. Now it will give some indication of condition. If there are any repairs that need to be taken care of, then that will be notated on the appraisal. Repairs that need to be taken care of in order to get the loan done.
As per guidelines, like minimum standard of living,
Yeah,
livability of the house.
yeah.
Okay. And who's responsible to pay for the appraisal?
So it is the buyer that's going to go ahead and pay for the appraisal, and it's ordered. It's going to be ordered by the loan officer. Okay. Now, what I'm going to do is, I feel like I'm getting hit with a lot of questions. I feel like I'm under a heat lamp. I'm going to put you under the heat lamp for a second here. Why don't we fire some questions back at you there, Crab? Um, what if the appraised value is lower than the purchase price?
So I'm happy that I stopped you in your tracks. I didn't know you were going to ask me that question. No. So if it
Nice.
so the mortgage loan is based on the lesser of the purchase price or the appraised value. So
Yeah.
if it comes in lower, then there's three options. Option one would be renegotiate the contract to sale, renegotiate the purchase price to meet the appraised value. Option two, seller won't budge, buyer still wants the house really bad. Well, they can bring cash to the table to make up the difference. And then option three is contract is voided, both parties walk away unscathed, and you move forward.
I mean, that deal is dead.
Yep, dead deal.
Now, what if the appraisal comes in higher than the purchase
So
price?
So if the appraisal comes in higher, seller might be kicking themselves a little bit and cursing their real estate agent perhaps. But in the buyer situation and the bank situation, it's just all warm and fuzzies.
Mm-hmm.
Um, you know, nothing changes with the contract. The seller has no leverage to change the contract. It's just something that happens from time to time. And it just means that your buyer is going to walk into instant equity. It's an opportunity for us lenders to go to puff up and celebrate our referral partners on the buyer's agent side. Say, hey, guess what? Your home over appraised. You should go. You owe your agent a beer because you've got $10,000 of free equity because he negotiated a great deal.
Yeah.
So always looking for those opportunities to support and show our love for our referral partners.
Yeah.
Because
Definitely.
that's what we are.
Definitely.
We're not vendors. I don't consider myself a vendor. I
Mm-mm.
first, referral partner first, friend second, and dare I say, family. Become family
I
with
love
these
that.
people. You
Christmas
know,
cards and whatnot.
really, yeah. Real estate agent is like that family member that you love, but you'd love to also just maybe punch him in the nose from time to time.
Right. Yeah, but that's family and friendship
And I think
sometimes.
it goes
That's the
back.
first
It
thing
goes
I yeah.
back.
Go ahead.
I was gonna say the agents could say the same about lenders for sure.
Nah, probably not. They probably say it about their peers and their fellow realtors. That's the first thing I say to a realtor is I want to get your picture on my refrigerator. How do I do it? Right? How's that going to happen? Christmas card. So usually works. Usually works. Now of those three scenarios, right? Comes in higher, comes in at purchase price, or comes in lower. What do you see the most often?
Most often, believe it or not, it comes right at purchase price. And you got to remember, we are supplying the appraiser with the contract, so they know the contract price, and they are trying to protect everybody. They are a third party, and it is their opinion of value. But there is a portion of their job that is, here's the purchase price because it's free market. The house is for sale, and somebody wants to buy it. It's like, can they support this value, or is it just way off?
Yeah.
So, and it's the agent's job, and it's all our fiduciary responsibility to make sure that we're being responsible. And a seller's agent is going to run comps before they list the house, and a buyer's agent is going to, for the most part, know if it's a competitive price or not. And if it is, they're going to take a rip at it. And if it's not, they're probably going to advise their buyer to wait or not go for that house.
Yeah. Yeah. Put it in their hands. Love that.
Yeah. It's all
Fiduciary.
about fiduciary.
Yeah.
You put the douche in fiduciary.
There he is. There's that spark that you needed, right? Caught you with a jab earlier, and you got me right back, didn't you? Right on the
It's round
button.
3. I went to the corner. I spit in the bucket a couple times. Mick cut me above the eye, and I can see a little bit better now. You hit me right on the button, and I knocked you on my heels.
You were not ready for it, were you? You were so
No.
unprepared for it. That's the way. Hey, that's showbiz, baby. Right? Um,
What's next on the docket?
next on the docket is hot takes. Hot
Hot
takes.
takes.
Hot takes, where we produce some controversial opinions or some ideas that might ruffle some feathers, right? Get people a little hot under the collar. Do you mind if I go first?
Please do.
Okay. Psychopaths, murderers, serial killers. What do they have in common? Well, I'm sorry. They have a lot in common with people who are already decorating for Christmas. Okay. What kind of
Wow, dude.
so? And this is a hot take, baby. This is a hot
It's
take.
very hot.
It's very, very hot. If you are listening to Christmas music, if you've already dialed up Mariah Carey, right? If your house has already transitioned into a winter wonderland of sorts, then you are a psycho, crazy person. Have a little respect, right, for
Dude.
all of the holidays. Okay, you got to give everything its due, right? Everything has a time, and everybody knows, every sane person knows, and I might be pushing this a little bit too far, right? But every sane person in my mind knows that you do not start decorating for Christmas until after Thanksgiving, right? Black Friday, that weekend, right? That weekend after Thanksgiving. Bam, you go nuts, you go out, you get your tree, you do your whole thing. If you start you just keep extending Christmas time earlier and earlier and earlier, and it
Blurs
in
the
my mind
lines.
it blurs the lines, and it deludes it. Like, it's supposed to be the happiest, most cheerful time of the year, and it's supposed to be condensed into this amount of time, right? Where you got to get all your happiness and cheer and all your Christmas stuff in this amount of time. Whereas if you spread it out over 2 months, it's bullshit. Like that's way too much time, right? You get cheered out, right? It's like, all right, enough. Like, I'm tired. I don't want to see the car commercials with the bow on the car in the first week of November. Like, give me a break. I'm not thinking about Christmas presents then, right? Not thinking about Christmas time. But that's my hot take.
I get it. Comparing them to like sociopaths, narcissists, psychopaths, and that's a little. I think that's maybe tongue in cheek. I hope maybe
Serial killers.
serial killers. But Al, I get what you're saying because I have Jules and Dom. I got young kids. We all got young kids. And Halloween, that he wanted to Jules wanted to decorate for freaking Halloween, October 1st. And
Yeah.
by the time Halloween came, it was like the decorations had just become part of our house, and it wasn't even special. I'm 100% with you. It is too early. The weekend after Thanksgiving, let it rip. But yeah, anytime before that, I'm totally against too. Good hot take.
Might have gone a little overboard with the comparisons, but I think we get the point. I just wanted to make sure I drove it home.
Yeah,
My disdain.
you're really good at really
Being
really
dramatic.
driving things home. Well, yeah. So my hot take is action always beats analysis.
Mm.
Um, and an analyzer would probably be like, well, actually, and like tell me the statistics, but um, there are an endless amount of there's an endless amount of possibilities, outcomes, things that could happen that you could never prepare for. And I believe that 9 times out of 10, even people that analyze things to a T, they analyze, and then end up making a snap decision anyway.
Yeah.
So action, don't be stupid, don't make bad decisions, but informed action, quick, taking action beats analyzing. Like getting ready. I don't know if you follow the Modern Wisdom guy, but he put out a video that really, he's awesome. I think his name's like Chris Williams, maybe something like that. His handle's Modern Wisdom. Check him out. Anyway, he put out a video and it was like talking about the thing isn't doing the thing. Telling your friends about how you're going to do the thing isn't doing the thing. Analyzing, reading, studying, learning about the thing isn't doing the thing. The only thing that's doing the thing is actually doing it.
Yeah.
And within actually doing it, whatever it is, you're going to learn 10 times more than you would spending months and months and months analyzing. There's perpetual students, and I think sometimes they could use a little kick in the butt. Now,
Yeah.
as far as how it goes with the mortgage stuff, people waiting on rate, analyzing rate, holding out for rate, waiting on the market, thinking about X, Y, and Z, foreclosures. This is the right time. I mean, there are very few points in history where people buyed and they lost their behinds on value and stuff. Um, if you have a means to buy and you have a want to buy, just do it.
Yeah.
Just do it, and you can refinance down the road. An agent that I follow, bring it back to following people. An agent that I follow um, put up a post about how, like, when she bought her first house, it was X amount of dollars. She didn't even know what the rate was, didn't even think about it. The payment worked. She bought the house. She sold it for, like, literally, like, 7 times more than she bought it, or 4 times more than she bought it.
Bought it
Made a
for
boat.
285 and sold it for
Yeah,
908.
yeah, you know who I'm talking about.
Yeah.
So it was a nice post. It was a good
It
post,
was a
and it made
great
sense.
post. Yeah.
And she's like, I didn't even know what the rate was, and she made $700,000, and then bought, and blah 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 blah. And this way of taking action led her to now she owns, I don't know, 15, 20 investment properties or whatever it was.
Yeah.
So those two posts kind of led me to my hot take, and I do believe that action beats analysis. Action is everything. Take
Yeah.
action, whatever it is.
Couldn't agree more. And it's especially, I'm somebody who gets caught up in the paralysis by analysis, right? I
Mm-hmm.
overanalyze every single thing about my life, as opposed to just do it. Put your head down and do it. The worst, I mean, in most situations, worst case scenario is you mess something up that can easily be fixed and you learn from it so that the next time you do it, it's not as bad, or in a situation where, we have to deliver bad news to a client, right? If we have to deliver bad news and, we've all been there where it's like, I really don't feel like doing this. I don't want to make this call. I don't want to make this call. And it ruins part of your day until you're like, I just have to do it. Right. And then usually that's early in your career. And then you get to a point where it's like, do it, rip the band-aid off as soon as you find out. They deserve to find out, and then you've gotten it over with, right? And most of the times it's not as bad as you think it's going to be, right?
Well, yeah, and
So
that whole delivering bad news is part of the job, and you know, it the longer you wait, the worse it gets. And then you sit there, and it's just the same as analyzing anything. You sit there and you run through all the possible scenarios. They're going to yell at me. They're going to be upset. They're going to cry. They're going to get out of the contract. The
mm-hmm.
deal's going to be dead or whatever. And you go through all this stuff, and then you call and you realize it's never any of those things. People
Mm-mm.
appreciate and need to know. So yeah, it's just like, just jump on it. And you're right. That comes with experience, and we're both at the point where it's just like the getting the positivity of getting it out of the way. It just beats any other scenario that you could
Yeah,
possibly have. So
absolutely.
awesome, nice
Couldn't
hot
agree more.
takes there.
Great hot takes. Great hot takes. Love
Do
that.
you have an opinionated?
I do not have an opinionated. Do you have an opinionated this week?
I have an article that I would like to share, a headline that I would like to share that was brought to our attention earlier in the week. So this is old news. It's about last year, but here's a shocking number. A headline. Ready? Americans pay $120 billion in credit card interest and fees in
Oof.
2022. I
Yeah.
can only imagine what that interest and fees are going to be in 2023, but 120 billion in interest and fees. It's not paying back the credit card, that's just paying interest that these lenders, these credit card companies are just putting in their pocket.
Yeah.
So my opinion about that is sometimes you get in a situation where you need to take out a credit card, and you may not have the means to pay it back. But in this situation we found ourselves in, we're in a position where a lot of people have equity in their homes and a lot of people have credit card debt. Instead of paying credit card companies a collective 120 billion of interest that you cannot write off on your taxes,
Big point.
take a look at possibly consolidating and paying that off in a cash out mortgage refinance.
Mm-hmm.
There's no shame in doing it, and in fact, if you're somebody who has a couple credit cards, maybe $50,000-$60,000 in credit card debt, you have an auto loan, maybe if you bought a car in the last 6 months, your rate's probably in the 20s.
Ridiculous. Yeah.
Credit card interest is pushing toward the 30s. Yes, it would stink to refi out of a 3% into a 7%, but think about your big picture, the blended rate of your 30% $100,000 or $50,000 credit card and auto loan and your mortgage. It doesn't hurt to talk to somebody like Al or I and get the numbers drawn up. You might find that you can save $1,000 a month. Are you
Yeah.
too proud to save $1,000 a month? Are you too
Right.
proud? So that's my opinion about that. I don't understand the whole. A lot of people have equity, and a lot of people could gain from a refi, and
Yeah.
they're hanging on, for dear life, and paying dead interest. And
Right.
at least with a refi, if you're taking a higher rate than you currently have, you can write off that interest at the end of the year. Keep some of your money in your pocket.
Yeah. I love that. Great. Great article. Great opinion. Couple things I wanted to touch on there. I think a lot of the folks that aren't doing it right or afraid to have the conversations, are the people that just want to talk, just want to be at the house party or the cookout, and when rates come up, they're like, yeah, well, mine's in the threes, right? What they don't want to talk about is how they're, how much money they're throwing away on $50,000 in credit card debt. To your point, they cannot write it off, right? That's at an ridiculously high interest rate that is compounding daily interest, right? And this person is probably making minimum payments on this card or on these cards, right? Not paying the balance down at all. And you're going to end up paying more in interest on that card than you are on your mortgage, right?
Mm-hmm.
So, there's just such a misconception about that. And I think, you touched on a lot of it, folks that are terrified to get away from the higher interest or to get away from their mortgage interest rate and take care of the debt that's really crippling them. And it sure as hell isn't the mortgage, right? Especially at a time when there's so much equity, right? And I also think that you're going to see that number a lot higher, right? When they come out with the numbers for this year, because how many
Yeah.
cash out loans have we done in the past, right? Even when rates were at 5%, 4%, we were still doing a ton of cash out loans because, people could stomach the 4 or 5% interest rate in order to refinance and get the cash out to pay off their debt. Now everybody's turned away from looking at that option, the cash out option, because of the interest rates have climbed up a little bit. So I think you're going to see people paying millions and millions more in interest, millions and millions more in fees because they don't want to look at the cash out option because they're afraid of the interest rate, when that could be the thing that saves them from going under.
Right.
I think, such a great point, and a conversation that needs to be had. And even if it looks on paper, right, based on minimum payments, like, oh my God, I'm breaking even. It's not even saving me money. Well, it's based on minimum payments for your credit cards. You're not paying the balances down. You're just throwing money at these credit card companies to pump out commercials to you. That's it. That's all you're doing.
Yep.
Right.
Oh man, yeah. You're just
Powerful
paying them
stuff.
interest so they can pay for their marketing to keep you
Right.
freaking
To
under
keep you
their
locked
thumb.
in. Yeah. That's all you're doing. So, and all you want to do is fast forward through the damn commercial anyway. You know what I mean? So fast forward through the commercial. Call us about a cash out loan. We'll help you out.
Yeah. And
Yeah.
look, we're happy to run the numbers, and if it isn't something that works for you, great. At least you know.
Right. And then,
Right.
I mean, that's our responsibility. We're very good about, like, hey, if we can't help somebody, I will let you know. I'm happy to let you know. You're in the best position you could be in, right? But at least have the conversation and give yourself that peace of mind, because there is a chance that we can help you. So, great.
Last thing about this.
Mm,
The other side of it is carrying high balance credit card debt hurts your credit score. So there's the piece of saving
Yeah.
money, and there's the piece of saving your credit
Yeah.
score. So just, things to keep in mind.
Well, to piggyback on that, how many people that are waiting for rates to come down are just destroying their credit because they can't make the payments, their credit utilization, the amount of debt in relation to the high credit limit is so high that it's just dropping their scores. And once they do, you're like, oh, finally, rates have come down a little bit. Let's talk about that cash out loan. It's like, well, you don't qualify now. You know what I mean? Your credit score is too low. Right now, in most situations, we'll find a program, but when rates come down, it's probably not going to, it's not going to help you out because you're still going to get a bad rate because your credit score stinks.
Right, exactly. So it's like here it goes back. It's great. It goes back to our paralysis by analysis. So here maybe you're somebody who's waiting on rate, and you're trying to analyze that, and in turn it's hurting your credit score, and you're going to end up getting the same rate you could have gotten today or worse because your credit score is worse 6 months down the road, 4 months down the road when rates are better. So you could today get the same rate without hurting your credit score. It's just take the action and do it. Cool. So,
man, great article. That was fiery. That was good stuff. That was a good article.
I think it is important, and it's part of our
extremely important.
So, cool, man. Well, what else we got this week? Is that it this week?
I think that's all we got. And we can rattle off a quick top
week.
6. We wanted to, but all right, covered all of our bases.
So yeah, I mean, I guess we'll wrap it up with I'm feeling more hopeful and optimistic today than I probably was last Friday. Last Friday we were the bomb was pushing toward 5, like you said, and that was scary, and it could very well go back. But I'd rather it be trending down than trending up. It's probably a good time to reach out to those people you pre-approved, reach out to those people that you talked to that were on the fence and said, I'm going to wait, maybe stir them back up, provide some good news to them, see if you can't motivate them to get back out in the market.
Yeah.
Good opportunity to call out to some agents, tell them you'll do that for any of those clients that backed off, give them some good news.
Yeah. And another thing too is, this is also happening at a good time. If this trend keeps going, right, and they keep coming down, even if it's slowly and incrementally, that's fine. Because we all know on the other side of the holidays, right, everybody spends outside of their means during the holidays. You got to buy that present, you know what I mean, for your girlfriend or your friend or your mom, your dad, or your sister that you can't afford, but you think's really going to put a smile on their face, even though they're going to be like, probably didn't really need it anyway. You're going to rack up more debt, right? So hopefully things come back down so we can help people on the other side of that.
Yeah.
You know.
And there's a lot of people. Might not be you, and you might not be able to relate to this, but trust us. Pull a lot of credit. Talk to a lot of people. A lot of people just they get tricked and get into a lot of credit card debt, and it's not a good
A
situation.
lot of credit card debt. Yeah. And now, like you said, now more than ever, right? So, yeah, I think we're gonna see it. We're gonna really see it next year.
Yeah.
So,
Hopefully we can all get out of it because there is the silver lining of we have equity. People have
yeah,
equity.
people have equity. So there's always a positive on the other side of that negative. Am I right? Just
Hmm.
sometimes you need to stop, maybe not act on things and analyze a little bit, right? Just my 2 cents.
All right. All right. Well, good show. Very successful show. I love this show. Um, that's our show. And
That's our
you've been
show.
Al.
And this has been Crab. Got punched in the nose, but came back fighting. Love it. Great show this week. We're looking forward to seeing everybody next week.
Yep. All right. Later.